Hey everyone, I have come up with my second video which covers exercise of ICAI on income from other sources. You can get the PDF link from the description in which illustration exercise is there. I have covered illustration in my first video. Hope you have all liked it. If you have not seen, please see in the my channel. I have covered that illustration in my first video. So here goes the exercise of income from other sources. Question number 1. Parimal, Managing Director of Heavens Engineering Private Limited, holds 70% of its paid up capital of rupees 20 lakhs. The balance as at 31st March 2019 in general reserve was rupees 6 lakhs. Okay. The company on 1st April 2019 gave an interest-free loan of rupees 5 lakhs to its supervisor having salary of rupees 4,000 per month, who in turn on 15th April 2019 advanced the said amount of loan so taken from the company to Shri Parimal. Okay. The assessing officer had treated the amount of advance as deemed dividend. Is the action of assessing officer correct? So we can see in the question that the company has not directly given the loans or advances to the main director, but indirectly we can say it has given. First of all, it has given to the supervisor loan of 5 lakhs, interest free loan it is, and in turn the supervisor has given the said amount to Mr. Parimal, who is the managing director of the company. So it will be deemed as dividend. As we all know, directly or indirectly it is covered in deemed dividend chapter. Any amount of loan given to a director or any amount of loan given to a shareholder holding 10% or more voting power, shareholding, then it will be deemed as dividend under section 222E, and then deemed dividend, and tax will be charged at the rate of 30% plus 12% surcharge and 4% health and education cess without applying grossing up concept. Okay, so let's see the answer. The company had advanced a loan to an employee who in turn had advanced the same to the managing director of the company holding 10% of its capital. By virtue of the provision of section 222E, the same shall be treated as payment by a company in which public are not substantially interested. As we see in this, it's a private company in which public are not substantially interested. So on behalf of or for the individual benefits of such shareholders who holds not less than 10% of voting power, to the extent to which company possesses accumulated profit. So company's accumulated profit is 6 lakhs and interest free loan has been given of rupees 5 lakhs. So 5 lakhs will be deemed as dividend. In this case, the company has reserves of rupees 6 lakhs on 31st March of the preceding year, and the amount of loan advanced on 1st April is rupees 5 lakhs. Therefore, the payment is to be treated as deemed dividend. The amount of interest-free loan of rupees 5 lakhs given by the company to the supervisor, who in turn had given the same to Mr. Parimal, shall be constituted as amount given for the benefit of Mr. Parimal and would be treated as deemed dividend. On such amount, the Heavens Engineering Private Limited is liable to pay dividend distribution tax at the rate of 30%, as I said, plus 12% surcharge, plus health and education says at the rate of 4%. This has been held by the Supreme Court in the case of L. Alagu Sundaram Chettar versus CIT 2001, 252 ITR 893. Hope you have understood this question. Question number 2. Mr. Santhanam, holding 25% voting power in VKS Manufacturing Private Limited, permits his own land to be mortgaged to a bank for enabling the company to obtain a loan. Okay, Mr. Santhanam requested the company to release the property for mortgage. The company failed to do so, but for retaining the benefit of bank loan, it gives an advance of rupees 10 lakh to Mr. Santhanam, which was authorized by a resolution passed by the board of directors. The company's accumulated profit on the date of payment of advance was rupees 50 lakhs. The assessing officer proposed to treat the amount of rupees 10 lakh as deemed dividend by invoking the provision of section 222E. Is the proposition of assessing officer correct in law? So as we see in this question, Mr. Santhanam has given his land as a mortgage to a bank so that company can get the loan. Okay, and after that Mr. Santhanam has requested the company to release his mortgaged land, but the company has failed to do so. So in order to retain the loan, that is that bank does not take away the loan from the company, so it has given a loan as an advance to Mr. Santhanam by passing a board resolution. And that time when the advance was given to Mr. Santhanam, the accumulated profit of the company was 50 lakhs. So assessing officer is applying the deemed dividend section 222E, but I don't think it is it won't be applicable. Deemed dividend won't be applicable because it's not directly related to the business. It's given for the purpose of, that is, company has been given a benefit by the shareholder holding 25% voting power. For retaining that benefit, company is giving advance, so it won't be deemed dividend under section 222E. So answer is, the issue under consideration is whether loans or advances given to a shareholder by the company in return of an advantage or benefit conferred on the company by the shareholders can be deemed as dividend under section 222E of the Income Tax Act in the hands of shareholders. The fact of the case are similar to the fact in Pradeep Kumar Malhotra versus CIT 2011 338 ITR 538, wherein the above issue came up before the Calcutta High Court. Okay, the High Court observed the phrase by way of advance or loan appearing in section 222E must be construed to mean those advance or loan which a shareholder enjoys simply on account of being a person who is a beneficial owner of shares. He is not the beneficial owner of shares in this case because he has given a loan, he has given a mortgage land on behalf. Because of that, the company has failed to release the mortgage from the bank. So for that purpose, to retain the benefit of the bank loan, company has given an advance to Mr. Sanatham. That is why, so I'm reading it out once again. The High Court observed that the phrase by way of loans or advances appearing in section 222E must be construed to mean that those advance or loans which a shareholder enjoys simply on account of being a person who is a beneficial owner of shares, not being shares entitled to fixed rate of dividend whether with or without any right to participate in profit, holding not less than 10% of the voting power. Okay, in case such loan or advances given to such shareholders as a consequence of further consideration received from such shareholder which is beneficial to the company, such advance or loan cannot be deemed dividend within the meaning of this act. As company has given, first of all, Mr. Sanatham has given his land because after giving mortgage and land, bank has given loan. Company is getting the benefit from the bank because of the land has been mortgaged by Mr. Sanatham, and company has failed to release the mortgage assets. So that is why company has given advance. It's not direct, it's not as a beneficial owner company is giving loans and advances. Okay, so that is why it won't be deemed as dividend. Thus, gratuitous loans and advances given by a company to a shareholder who is the beneficial owner of shares holding not less than 10% of voting power would come within the purview of section 222E to the extent of accumulated profit of the company, but not the case where the loans and advances given in return for an advantage conferred upon the company by such shareholders. Okay, in this case, advance of rupees 10 lakh was given by VKS Manufacturing Private Limited to Mr. Santhanam holding 25% voting power in lieu of non-release of his personal property from mortgage, thereby enabling the company to retain the benefit of the loan obtained from bank. Therefore, applying the rationale of the Calcutta High Court ruling in Pradeep Kumar Malhotra case, such advance cannot be brought within the purview of section 222E since it was not in the nature of gratuitous advance but was given to protect the interest of the company. Okay, the proposition of the assessing officer to treat the amount of rupees 10 lakh as deemed dividend by invoking the provision of section 222E in this case is therefore not correct. Okay, now illustration question number 3. An enterprise engaged in manufacturing of steel balls discontinued its activities and decided to lease out its factory building, plant and machinery and furniture from 1st April 2019 on a consolidated lease rent of rupees 50,000 per month. Okay, on 1st April it has been given. Compute the income for the assessment year 2021 for the SSE from the following information. Interest received on deposit is rupees 1 lakh. Brokerage paid on hundi loan taken. Hundi loan, which it's a type of loan with old age people used to give as a hundi. It's a type of, you can say, a bill of exchange, and after that on the basis of that people used to get loan. A type of, you can say, a bill of exchange, you can say. And next is point number 3 is interest paid on hundi and other loans which were given as deposit on interest to others, that is 75,000. Expense incurred on repairs of building, plant and machinery 15,000. Fire insurance premium of plant and machinery and furniture is 12,000. Depreciation for the year is 1,47,500. Legal fees paid to an advocate for drafting and registering the lease agreement is 1,500. Factory license fees paid for the year is 1,000. There is unabsorbed depreciation of rupees 2,75,000 of the assessment year 18-19 and 19-20. Point number 10 is interest paid in point number 3, that is interest paid on hundi, that one 75,000. In above includes an amount of rupees 25,000 remitted to non-resident outside India on which tax was not deducted at source. So in this, tax has not been deducted at source, so entire amount will not be allowed as an expense while calculating the income. So the amount of 25,000 as an expense will be disallowed. So let's see the answer of question number 3. So the income derived from leased asset shall be chargeable to tax as income from other sources under section 56(2)(3), but the computation thereof shall be made after allowing deduction specified under section 30, 31, 32 subject to section 38. This is as per the provision of section 57(2) and 57(3). That is, for earning that income from other sources, we have spent some expenses. So after allowing the expense, the amount after allowing the expense on earning such income will be chargeable under the head income from other sources. So after deducting the expense from the income, it will be allowed, and deduction is allowed in 56, 57(2) and 57(3). So let's see computation of income under the head income from other sources. Lease rent for 12 months is at the rate of rupees 50,000 per month is coming to 6 lakhs, less expense and deduction allowable under section 57(2) and 57(3), that is repairs. As we have seen, repairs is in point number 4, 15,000. Fire insurance premium 12,000, that is in point number 5, and legal expenses for drafting of lease agreement is 1,500, that is in point number 7. Okay, and after that factory license fees 1,000, that is in point number 8, and depreciation for the year is 1,47,500. Depreciation is in point number 6. Okay, so and unabsorbed depreciation for earlier assessment years eligible for deduction, that is 2,75,000. So amount is coming to 4,52,000, and after allowing the expenses, the income is coming to 1,48,000. So let's see what note 1 says. Unabsorbed depreciation of rupees 2,75,000 pertains to earlier assessment year. As we have seen, assessment year 89, earlier assessment is as it is given in the question, assessment year 18-19 and 19-20. Okay, so unabsorbed depreciation of rupees 2,75,000 pertains to earlier assessment years. The unabsorbed depreciation shall form part of the current year depreciation and can be set off against any other heads of income. Accordingly, the amount of 2,75,000 is adjusted, allowed to be set off against income from other sources. Okay, so it has been allowed. So now interest on deposit, that was rupees 1 lakh, that was given in point number 1 lakh interest on deposit. So For earning this interest, what expenses we have incurred? Brokerage paid on hundi, loan taken, that is 2000, and interest paid on hundi and other loan which were given on its deposit on interest to others, that is 75,000. But in this 75,000, 25,000 will be deducted because 25,000 won't be allowed, so amount will be coming to 50,000. So after interest, interest on deposit is 1 lakh. Expense allowable under section 57(1), brokerage expense is 2000, as I said. Interest on hundi loan 50,000 will be allowed and 25,000 won't be allowed. We'll see note number 2. So total is coming to, after deducting the expense, it's coming to 48,000, and total income is coming to 1,48,000 plus 48,000, 1,96,000. So let's see note number 2. Since deposit are made by investing amount received on hundi and other loan, the interest on hundi and other loan would be eligible for deduction from the income arising on such deposit. Okay. However, interest paid to non-resident is not eligible for deduction as the tax has not been deducted at source, because tax should have been deducted, as we all know, for while making payment to non-resident or any resident, any amount which is liable to deduct, any person who is liable to deduct tax at source. So if they don't deduct, if they pay to non-resident, entire amount will be disallowed. So it has been disallowed. Okay. Now see the question number 4, last question of exercise. In July 2019, Mr. Parvesh, employed as a marketing manager in pharma company, received a Maruti car as gift from a distributor of the company. Okay. The value of the gifted car is estimated at rupees 2,60,000. Okay. Is the value of car taxable as income? If so, under what head it is taxable? So is there an employee relationship between Mr. Parvesh and the company, pharma company? There is no employee-employee relationship. It won't be taxable under the head income from other under the head salary, and it won't be taxable in the head income from other sources as well, because car is not covered in the definition of property in section 56(2)(10). So it won't be taxable. Let's see the answer. Mr. Parvesh, an employee of pharma company, has received a car as gift from a distributor of the company. Since there is no employee-employee relationship in this case between the distributor and Mr. Parvesh, the value of the gift is not a perquisite chargeable to tax under the head salaries. Okay. Section 56(2)(10), that is income from other sources, brings within its scope the value of any property received by any person. For this purpose, property means immovable property, being land or building or both, shares and securities, jewelry, archaeological collection, drawing, painting, sculpture, work of art or bullion. Okay. So for the movable property, that is shares, shares and securities, jewelries, archaeological collection, drawing, painting, sculpture, work of art or bullion, I made a code, that is DJ swap. The D for drawing, J for jewelry, S for shares and securities and sculpture, S square it is, W for work of art, A for archaeological collection, P for painting. So it, and additionally one more immovable property is there, that is bullion. You can learn by that way DJ S square swap, DJ swap and bullion additionally, and land and building is a movable property, so you can memorize by that way DJ swap. Okay. Therefore, for the purpose of attracting the provision of section 56(2)(10) for chargeability under the head income from other sources, an individual should be in receipt of property as defined therein. Since car is not included in the definition property, the provision of section 56(2)(10) would not be attracted in the hands of Mr. Pravesh. Okay, that's it. So hope you liked it. If you have liked it, please like, share and subscribe, and I'll be uploading my next video soon, and let's see what chapter I'll be covering next. If you want any small chapters, if you have any request, you can write on my comment box and request for that what chapter you want. Okay, that's it. Thank you very much.